Welcome back. Today our cash secured put and the covered call on Marvell executed, so we need to track those transactions. So let's get started. So here we are over in Ameritrade's ThinkOrSwim. We're logged into our paper trading account for the demo on running the wheel strategy on Marvell technology, MRVL. And here's just the daily chart for today. Something interesting happened. We had originally, I believe, placed a covered call for the 37 strike price, and we had placed a covered or a cash secured put order at 36. However, when the market opened, as you can see overnight, the price crept up from around the $36 range up to about, it looks like the $37 range. Anyway, so basically one of the orders didn't fill. The put did not fill because I was looking to get, I don't know, I think it was like $1.14 at the $36 put, and it didn't fire because now it's trading way up here. So I had to go in and adjust it, and I ended up just selling a $37 put. So it's kind of funny. I sold a covered call at 37, and I also sold a cash secured put at 37. So that made it kind of interesting. So anyway, let's go ahead and go over to the monitor tab so you can see that transaction and what happened. So let's get rid of the other account. So just go over to the IRA account, which is where I'm running this transaction rather. All right, so here's Marvell, and we can see that the call fired and the put fired, and up here you can actually see those order executions. So the put I had to adjust, and I changed it to 37 at the strike and got 95 cents for it, or $95. And the 37 strike price call got executed for $1.27. So let's see. So overall, yeah, that's what I pulled in. And so it's kind of funny. This one's already in the money. Sorry, no, the put. The put is already in the money because where did it end? Yeah, so it ended at 36.92. Let's look at that. So, right, the last traded price today was 36.92. So one of these is going to be in the money, regardless, either the put or the call. In any case, I mean, I could have left it at 36 and collected a lower premium, but as the website says, we like running things at the money if we can, because you ultimately collect the biggest premium running it that way. All right. So what we need to do is jump over to the web application and record these transactions and these positions. All right, so here we are on the website myatmm.com. We're logged into our demo account, and it goes to the dashboard first. We need to go over to the cost basis screen, go ahead and filter down to only our positions, which we only have a position on Marvell right now. As you can see, it shows that we own 100 shares, and we are wanting to create the put and the call position in the web application. So we can actually go ahead and just put two, go ahead and create two. You can do one at a time if you want, or you can just do two like I'm showing here. And both of these are selling to open. We're selling a cash secured put to open the position, and we're selling a covered call to open the position. So let's go ahead and just do the call first, and this one will be the put. We did one contract on either one of them. The expiration date on both of them, I believe, is for this Friday, and we will jump back over to Ameritrade to double check that. So let's go back over here. All right, the contract, yep, the expiration is for January 13th of 2023. All right. So I got that set, and the strike, if I remember correctly, was 37 on both of these, which makes this pretty easy to do. All right, we will verify the 37 strike, and I need to get the price that I did for the call and the put. So let's jump back over to Ameritrade. All right, so yep, 37 is the strike. So the put was 95 cents, and the call was $1.27. So 95 cents and $1.27. Put was 95 cents, and the call was $1.27. All right, so we need to go ahead and click save, and when I click save, it'll move out of draft position and it'll move it into the calls. And I can go ahead and expand these so you'll see them show up. And you'll also notice that this number will increment for the put and the call. So we're going to save the call first. That's saved, and it moved it down there. And as you can see, it incremented the number, and now we're going to save the put. So there, the put went into that grouping. So now we have saved those transactions, but you'll notice again that none of these numbers have changed up here to reflect that. That's just because we've put the positions on the board. We've put the positions in here. It will reflect the puts and the collateral from this put contract. However, the transaction history has not been updated, and that is what will update this overall gain and loss. Will change the credits received, and it'll change the cost basis to include the premium. So we need to go ahead and add these transactions, and we can either type them in here manually one at a time, or we can go ahead and click save on these guys again, and it'll produce these proposed records for us. They're just helpers to basically avoid having to type this in manually. And as you can see, it actually already added these helpers. I didn't have to click it again, but clicking it again doesn't hurt anything. You can click them as many times as you want to produce these helper records. So I'm going to go ahead and record the put first. So I'll move the put transaction down, and since this is a demo account, we're not going to mess with any of the fees. We actually only received, like, it's Ameritrade is 65 cents per contract plus some regulatory fees, so it's probably only 94 something. But to keep math easy, we're going to put that there. All right, so the put transaction has been recorded, and it is now part of our transaction history. Now we need to go ahead and move the call down, and again, not messing with fees, so we'll just keep the 127. It would have also been the 65-cent commission fee and some regulatory fees, so it would have been 126 something, but we're going to go ahead and keep it at the 127. Click save on that. So now it has been retained in our transaction history down here as well. And I'm going to go ahead and collapse these two, just kind of consolidate the screen. And as you can see, the overall gain loss went up from 99 to 321 because we just collected over $200 in premium, which is pretty nice. And you can see now the cost basis with premium was previously 3601, but now it is 3379 what we're setting out on this trade. So this trade right now is working out pretty nicely in our favor. So we will continue tracking this one, and since this is the only position, I don't really need to go back over to the dashboard, but just to show you that part of the application, because if you're running more than one transaction, and over time these numbers from when you go from month to month will start getting unwieldy, because this is giving you a total overall for this stock forever. But if you wanted to start seeing the grouped up totals, you can come back over to the dashboard, and you can see the Marvell broken out right here. You can see the overall for all time right here. Eventually, at some point down the road, I might start changing this to where you can group it by year. But for now, this will work. Now, I will say you can look at the premiums tab, and this does group it by month. And right now, Marvell is the only one that I've been running in January. So you can see that same 321 represented here. So let's jump back over to cost basis real quick, Marvell. And I will point out this. The last value that it actually has tracked from the stock market was put at $37. $36.92 is probably what it's trading after hours. So it looks like it closed in the regular stock hours right at 37, which means our unrealized gain and loss is setting right at 0. And one interesting thing to note is if it does end like this Friday, if the market closes at above $37, which means our call right here, our call contract will get assigned at $37. Something I wanted to note and point out is you'll hear a lot of people that are discussing the wheel strategy, and they always talk about capital gains, how they don't want to get assigned because they don't want to have a tax consequence or anything like this. And I'm not a tax professional. By all means, go ahead and you need to work with a tax professional. But my understanding is a capital gain is when you sell it for more than you bought it for. And if I sell it for exactly what I bought it for, or if I sell it for a little less, because there are going to be some fees, like regulatory fees. So technically, if I sold it at 37, I bought it at 37, I actually would only get like 36.99 and some change. So I would have actually had a capital loss. And to my knowledge, you can only pay taxes on your gains. Meaning, if I keep on running this wheel strategy and I'm in it at 37, I'm out of it at 37, I'm in it at 37, I'm out of it at 37, I don't got no capital gains. Meaning, I don't have to worry about that tax consequence. At least that's the way I can do the math. That's what it looks like to me. Obviously, I'd run it by a tax professional to get the 100% thumbs up on that idea, but I'm pretty sure that's close to accurate. Now, the premiums, you're going to pay taxes on that regardless. So that has nothing to do with the price of the stock. And again, talk to a tax accountant to be certain on that. But in any case, so yeah, I run the real strategy at the same price at my cost basis, because then as I dollar cost average this thing down, my cost basis is going to be coming down. So I theoretically am always going to be getting out at the cost basis. So I should never really have any capital gains. So I should only be, and again, that's because I'm focused on cash flow only. I'm focused on selling premiums for cash flow. The stock is just a means to an end. I'm not looking to get any increase in the stock value to have a capital gain, and I don't want to have a capital loss either. I just want to get in and out at the same price, and I'm just using it as a tool to sell premium. So anyway, that's just my 2 cents on that whole philosophy and standpoint on running the wheel strategy and getting assigned or not getting assigned. I don't really care about getting assigned or not assigned on puts and calls. It's just a means to an end to get in and out and sell premium on a stock. And yeah, so that's pretty much my thought process on that. So in any case, we will continue running transactions on this. At the end of this week, we'll see if it ends, if the stock price expires Friday or goes Friday at above 37 or under 37. Either way, it looks like one of these is going to get assigned, either the call or the put, because I'm running them at the same strikes. So it should be interesting. So stay tuned for that. I want to thank you for watching. Like and subscribe if you haven't already. I'd really appreciate it. And go out today and get your free account on our website, myatmm.com, and you can start tracking your transactions and your cost basis today as well. Thanks, and I'll see you in the next one.